It's not you, Procter & Gamble, it's me. You're a fine dividend king, but I just want different things than you're offering right now. I mean, we've had lots of good times over these past 3 years, and there are still plenty of dividend investors who want you. And hey, we'll still see each other inside of VVIAX, where I hold you in the 401k. What's up? I'm Russ, and yeah, it's true. I've decided to move on from Procter & Gamble. I love this community that we're a part of, and I would really be honored if you would share your thoughts in the comments below. Now, Procter & Gamble, of course, is a company with a really long history and a ton of well-known brands. But over the past decade, it has yet to see much revenue growth, and I think their future prospects are limited from a heavy reliance on those mature brands and growing competition. And what's more, the stock, according to alphaspread.com, is about 28% overvalued. Now, Procter & Gamble is a solid dividend king, but from here, I don't see a lot of upside potential. Before we get into what I bought, if you are enjoying the video, toggle that thumb up tab with the appendage of your choosing. So I decided to sell my shares of Procter & Gamble and consolidate into more Target. You might be thinking, Target? Isn't that the company that had a big inventory problem in 2022 and saw its stock price drop? And yeah, that's true, but what a lot of people don't realize is that Target has been working hard to reduce their inventory levels. They also have a devoted fan base of younger shoppers, and it's been able to partner with big name brands and conduct hyper-specific marketing campaigns thanks to its Red Card and Circle program. And while the stock isn't necessarily cheap, I also don't think that it's expensive, and I think it has a lot more growth potential right now than Procter & Gamble does. So my cost basis on Procter & Gamble is $123 at about a 23% gain, and it has an intrinsic valuation again from Alpha Spread of about $109, so it's about 28% overvalued. Where we see Target, I have a cost basis of $143, so that's going to come up a little bit. It's a 13% gain on those shares, I'm happy to add, but they have an intrinsic value of about $176, so it's about 8% undervalued. These PEs are indeed a little bit high, but I think it's because people are paying up for quality and they're just strong companies. Procter & Gamble's PE of 26.5, yes, it's a little bit lower than Target, but if I'm going to pay up for some growth potential, my thinking is that I want to go with the company that I think can have more capital appreciation, meaning that their share price can increase much more. I like that Target has a much lower price to cash flow and a really low price to sales. And if we look at the revenue growth, yeah, 4.25% for Procter & Gamble. I would like to see something a little bit more. Almost 8.5% compounded revenue growth over the 5 year for Target. Starting yield right now, 2.5%. My yield on cost for those Procter & Gamble shares was just about 3%. Target's dividend starting yield is 2.66%. But check it out. Procter & Gamble has been paying an uninterrupted dividend for 132 years, 66 years of dividend growth. But that last dividend increase that they just had a few weeks ago from this recording was only 3%. 5-year CAGR of 5% and 8% over the last 20 years. But if we jump to Target, it's a lot quicker. 20% increase they gave in June of 2022, 10% 5-year CAGR, and a 15% 20-year CAGR. So they've been growing that dividend much quicker. And they are also a dividend king. Shout out Target at 51 years of growth. Their payout ratios are not too bad. Free cash flow payout ratio has jumped up a little bit for Procter & Gamble to 75%, while Target is only 64%. Now, the free cash per share is a little bit skewed because Target had that inventory problem where they over-earned, obviously, during the pandemic, $15.70 per share. And then because of the supply chain and inventory issues, dropped all the way down to negative $3.27. That's the first time in a long time that Target has had negative free cash flow per share. So it's a bit of an aberration, but I fully expect them to revert to that mean of about $4, $5, $6 per share of free cash flow. And then buying back shares, Procter & Gamble over the last 5 years has bought back an average of 5.64%, while Target has bought back an average compounded of 15.45% of their shares over the last 5 years. So that's really cool. Gives us all who continue to hold more ownership in the company without having to do anything additional. Target's net debt also shot up a bit, so hopefully we see this starting to come back down again. They have a really good management team. I do feel confident that they'll be on top of it. Where Procter & Gamble's debt is only at 41%. And I love the interest coverage ratio. You know that I love this number. It is how much operating income they have to cover the interest expense. So for Procter & Gamble, they have a whopping $35.28 to cover every $1 of interest expense. They can easily handle and service the interest on that debt. While Target, not as good, is at $8.28. So I really don't see a problem there, and that will probably come up in the future. I really like Target's quicker paced dividend growth. And I think Target is more essential to the consumer because it's really not that big of a deal to switch from Crest to Colgate, where if you ask somebody to switch from Target to Walmart, might not be as easy of a sell. So at the end of the day, I just decided to sell those Procter & Gamble shares, which I do have exposure to in VVIAX and the DIVO ETF still. I think Target just has more upside on the dividend, on the share price, and a better growth story and trajectory than Procter & Gamble does right now. And I'm excited to see where both of these companies go in the future. Plus, that next dividend from Target should be an increase, so I'm excited to see how big that will be. And if you're interested in learning more about dividend investing, I recently shared some of the most important lessons I've experienced from 5 years of dividend investing in 5 minutes. All you have to do is click the floating little box next to my head, and I will tell you all about it there.